Let me go and YouTube. Penny! Penny! I love you, but you gotta stop. I had a fun day of an error has detected, please. Oh. There we go. And I'm going to put up the cues. Morning, Chase. Morning, Joe. I am just getting started, so you guys are going to have to put up with a little bit here. Why is this not updated? Notes, quit. Oh, Penny. Oh, Penny. Home. Okay. Copy. Wah, wah. Back. Okay. We got 4 stocks to watch. Morning, Scott. Yup. Penny is on her game. And if anybody saw it in the private Facebook group, Miss Penny and Miss Daisy had 2 visitors yesterday. Okay, we're going to talk about Apple. And JP Morgan did upgrade. What's Apple? JP Morgan upgraded Shopify. There we go. That's it. And it didn't provide an enormous boost, but kind of points to any reaction is an overreaction. Okay. I think I have enough here. I'm just going to get started because you know what? It don't matter what I do. Jim Cramer's on the TV talking about it's Apple. It's Apple. You can't buy Apple. You cannot buy Apple. You cannot buy Apple. You cannot buy Apple. Penny, come here. Hold on 1 second. Penny, I love you. What are you barking at? We're going to get these fuckers out of the way. those birds out of the way. You do that, Penny. Good girl. Oh. So I've had a fun morning. I haven't done my scans. I got to do my scans. Morning, Tyler. I've knocked down 2 birds' nests already this morning. And I'm a bird lover. I'm a nature lover, so I don't like doing this. But they're on my house. And so I looked up how to stop. It's an American robin. If you guys haven't downloaded this app is awesome. It's called Merlin ID. Trust. Based on your recent escrow analysis, we thought you might be interested in searching for lower home insurance. Yeah, why not? I can do that. Hold on. And so Merlin ID is the app. And I don't know if it's on Android. I don't care if it's on Android. Because I have Apple. But Merlin ID is oh no. Yeah, I did get an ad. You can put up the microphone and it will tell you what type of birds are outside. It's awesome. It's awesome. Awesome. Just awesome. And it's run by, I think, Cornell University. And so I have these robins that are outside. So I Googled how to get rid of robins' nests. And they say they're incredibly territorial, so they're probably there. So I sicked Penny on them. I said, Penny, son of a bitch. I said, let's go. And she obliged, but they did not listen. They didn't get the memo. And so there's a bunch of birds in my backyard right now. Oh well. It is what it is. Bitcoin is crashing. Covered. I care about covered call, but I'm just going to do the podcast with Penny barking because everybody loves little Penny, unless you meet her. And like I told people, don't think that Penny is like all lovey-dovey, because she will be the sweetest little thing, and then all of a sudden she fucks you up. She fucks you up. Energy, leveraged ETFs. A lot of energy names. TBT. TBT and DRUP. What is DRUP? This is the Granite Shares Disruptors ETF. Wait, who's saying NVIDIA has the best dividend? Rollins. Morning, Steph. NVIDIA? I mean, it's a crappy dividend, but at least they have a dividend. That's the big thing, is they have a dividend and they can always up it. A company that doesn't have a dividend and doesn't give anything back to the shareholders, morning, ropey rope, ropey rope. Oh, our watch list has a ton of cross ups. Okta, Duolingo, Par Datadog, GLBE, which is any reaction in the market is an overreaction. MongoDB, which might be an interesting one for the gamblers in the group. Watch list, not owned. Let's see. Dexcom. Penny, I love you, but you got to stop. You got to calm down. There's a point in time when you just give up. I want to make sure you reach that point in time. I do not want to Dow and Cat. Dow. We're going to look at the NASDAQ. Jim Green, Apple is up there. Apple's, boy, you shouldn't sell Apple. You shouldn't sell Apple. Rusty, she's a, and I should bring her up, but, on and Dexcom. Okay, let's go to the S&P. Yesterday was a good day for everyone's portfolio, probably, except for mine. Apple was a buy the rumor, sell the news. Target. Okay, we got our scans. Now we'll go back to the strategy tester. Yes, and we will go to 4 hour. Wah, wah, wah. TRUP. Interesting. QQQ. I'm seeing a lot of red in the core portfolio. Cleveland Cliff's down another 3%. I mean, that company can't get a break. Shopify's up 1.3%. Good. I don't know if Shopify's taking off, but 1.3% with that, again, we're talking about a gap fill here from 64 to 76. That's not a bad one to play in my mind. And, I do think when you look at this one, it is expensive, but they continue the growth. And I've got to turn on my do not disturb because I know my dad's going to call me or something. My computer is messed up. But you got the 200-day right there at 80. And it's still, it's starting to turn a little negative as you move a little bit sideways. But you got the MACD right on there. I mean, this is one of the best charts that I can see. But, again, it's not a unbelievable chart. We're going to go over here and just make sure that this is up for our after hours. We have earnings from Oracle today. So let's see it. Boyle kind of took a little heater today. After a bad day yesterday, Boyle is up, 4 or 5%. So CRM insider buy. This is an interesting one. Snow insider buy. Yeah, I got killed by Apple. Apple was my big loser. I mean, I was down, pretty large. I mean, and I'm not complaining. I mean, Apple drives my portfolio, and it's something that I've known for a while. And I wish this year NVIDIA was driving my profile, my portfolio, but it's not. It's not. Penny, I love you. Come here, Penny. Come here, Penny. Come here. Penny. Penny. Come here, Penny. Are you coming? Come here. Come here. Come here, little girl. Come here. Come here. Come on. Come on. Come here. Oh, look at this. See? You're the little terror? You're the little terror? Okay. Will you stop barking? Go lick Daisy's face. Okay. Okay. We just got a bunch of bots joining too now, so. Yeah, Shopify's a good one. Okay, we're going to put in this stuff. And I'm going to open up, we're going to go to QQQ because that's where we're going to start. We held 460. We're at 463, so again, that's the first line of defense. Let's see. Oh, and there's a stock today, by the way. That's really solid. Zscaler and NVIDIA. JP Morgan upgraded them. This is a good, interesting one, and I think it's a video. Is it a video or no? It's a post. Okay. This is about Bill Gates could have been the world's first trillionaire if he had let his winners run. He sold out of his Microsoft. And let me see if I have Uber here. I didn't look at my notes, but I was writing it. My phone died. Yeah, there we go. So this one is one that we want to copy. And then we'll put this over here. And we'll put that there. And then there we go. She's going to bark the entire freaking time. But let me go make sure that before I'll open this up. This is Elon. That's my take on Elon stuff. This is Apple seasonality. Keep an eye on Apple. This is, I think, Gene Munster's take on Apple. Yeah. I liked his take. This is the Apple Day impressed. I mean, it was pretty impressive. This is a post that Jason is going to build us. A strategy. And this is a strategy for SPY. So we're going to include that. So if you're interested in SPY, I mean, Jordan, my take on PayPal. So I got out of PayPal. I thought it was going to bounce back up. I got out of PayPal. I don't exactly know where. I own Square, and the only reason I own Square is because it's a legacy buy, and I haven't sold it because it's showing some strength. PayPal, on the other hand, it is in pre-market. It's down 0.42. I don't think it's anything to worry about. It's a different business, and I think the new CEO kind of knew that Apple was coming out with the Apple Cash. I wouldn't worry about it too much, but I'm out. I just got sick and tired of PayPal. While you may have a bottom here and you may be putting in a nice consolidation, the 200-day is still moving negative. The 50-day on the weekly is still moving negative. I mean, it's leveling out. So, and you do have confirmation over the top of it. So it's not bad. I just gave up. I mean, so Jordan, I don't consider PayPal to be a buy in my book until probably 80 or 90. This resistance right here at 100 is going to provide a significant resistance. Oh, and look, 90 is going to provide resistance. Oh, and 75 is going to provide resistance. So you've seen it. This is a chart. If you take it from 2021 at the highs, it's upper left to lower right. That makes no sense to me to put some money in there. Do I want to time it? No. If it gets up to 100, then maybe I'll buy it. I don't care about it now between 67 and 100. It just doesn't provide me any like warm and fuzzy. So the warm and fuzzy stuff is what I want. And you take a look at PayPal. Take a look at Apple. I mean, Apple on the weekly, it's bottom left to lower upper right. And even in this short term, bottom left, upper right. But you do have some crazy resistance here at 200, 197, 198. And yesterday it pulled back. And today, do we go higher? I don't know. But I'm in this one for the long haul. They don't have competitors. They're the ones leading the charge. So which one do I want, PayPal or Apple? I'd buy Apple all day long. No reason for me to buy PayPal. Right now, I don't use PayPal. I mean, if you want to tip me, you can absolutely tip me on PayPal. I got PayPal right down here on the link tree. But I other than that, I don't use PayPal. I don't use Pay for anything. So, I think Venmo is one that I use. That's owned by PayPal. I use that to pay friends and stuff. But I will tell you, Jordan, I'm an old guy. I'm 53 years old. Most people use Cash App, and that is owned by Square. And so I think Square, with the Apple payment stuff, I think that's going to get hurt more. So I think people have given up on Venmo because it's all old people using it. So that's my thoughts on PayPal. I don't like it. I don't think it does anything. I don't think it has any opportunity more than anything. I just got a text. I don't know what that is. Okay, I don't know what that is. I saw the picture from last night now. That's funny. Okay. Now Penny has calmed down. So I'm going to hit record. Now if I lose you, then understand. I just do. Oh, I have to bring up Oracle earnings. Earnings tonight. Oracle tomorrow. AVGO. So let's see if Seeking Alpha has Oracle expectations. I think they probably should. They probably will. There we go. Earnings preview. We're going to put that up. And we'll put this right here. Oh, that's Alpha Picks. Put that right there. And okay. QQQ. You're welcome, Jordan. It wasn't much, but that's my personal opinion. And honestly, morning, Laurel. PayPal for me, I gave up on it. It was one that I thought was going to pop to 80 when I bought it at 65, 66. Took a small loss on it. Or I'm sorry, I had a big loss because I had a legacy purchase on that one that was about, we're talking $10,000 loss, $5,000 loss, somewhere in that neighborhood. I forget. Because part of the psychology of part of being a good investor, when you talk about letting your winners run and don't water your weeds, is when the philosophy and the story on a stock changes, you don't go back to it until the story has changed. And the fact that there's a competitor in the market is it's not a good story for PayPal. It's a bad story for PayPal. I'm shocked it's holding up that much. But I just don't think people care about PayPal anymore. I think it's one of those that, it may get some meme stuff, but morning, Mark. Okay, I'm going to hit record. If I crash, I'll be right back. I don't know what. I am looking at using a StreamYard for this live stream. Right now I use OBS, just so everyone is aware. And OBS is an open source platform, and it seems to crash sometimes, but it's been fairly stable. I don't crash a lot, but I do crash sometimes when I don't restart my computer because I'm on an iMac. So, morning, Sherry. And I do have to get a new computer. Let me see. I'm going to go about this Mac. This is a 2017 27-inch Retina 5K. 3.4 gigahertz quad-core Intel Core i5. Sucks. Memory, 40 gigs. I upgraded this one. So it's, this is you show me a PC from 2017. That's 7 years old. That's still running this well. Zscaler's good. Zscaler just, I have one, they just partnered with NVIDIA. So I have that coming up, Sherry. I think Zscaler, I mean, the chart on Zscaler, well, I'll go over it in the thing. Okay, I'm going to hit record. Okay. Okay. Let me take a sip of water. Good morning. It is Tuesday, June 11th. I am a little late today, 9:24. I have been knocking down birds' nests, and I am a nature lover. I am an animal lover. I am absolutely not someone to do something, but I've been knocking down nests because there's American robins. If you haven't downloaded this app, it's called Merlin ID, and it's on the iPhone. I don't know if it's on Android, but it's run by the Cornell University. And you can just hit the microphone, and it tells you which birds are in your yard based on their chirping. It is absolutely incredible. I found out American robins are in my backyard. There's about 4 other birds. I'll take a screenshot so you guys can see. But the robins are the ones building nests on my gutters, and so I had to knock them down. And they're very territorial, so if Penny starts barking, I will say, hey, stop. But on the live stream, it was bad. Where are we in the markets? Oh, by the way, update on the TV. It seems to work. The bulb seems to come on, but with extended use, it goes off. So maybe I have to Google it, but I am still in the market. LG seems to be the clear winner based on some of the Spotify comments. If you have a great TV that you love, link it down below. Tell me, comment, do whatever you need to do. Get in touch with me because I am in the market for a TV. I think it's between the LG and the Hisense right now, although Samsung, if I can get a deal on a Samsung, I do love Samsung. I've got a Samsung upstairs in my bedroom from 2005, an LCD. That is still rocking with the picture. I have a receiver and surround sound in my bedroom. And I have just in front of me a 2008 Samsung TV. So I love these things. But, Samsung, the picture quality, when we went to look at it, wasn't as good as the LG or, the Hisense. And Vizio's still in the mix too. So let's look at this. This is the Qs. I told you yesterday, as long as we hold 460, we've got support. You're seeing it. Put in more of a support there. What happens when we put in support? Well, look at this. From March until April, for an entire month, we traded in a range of 430 to 445, 435 to 445. That may be what you're putting in now. I do think we are getting into a summer of just sideways trading. I think you're going to be able to make money in stocks. I think you're going to be able to add to your ETFs. I think this is a good opportunity. I think on any pullback, you grab NVIDIA, you grab SMCI, you grab any of those names that you've wanted to add on pullbacks. Apple yesterday, great pullback, great opportunity in my mind. But here's the Qs. It's just going sideways. Now, I did post in the newsletter. If you're interested in the newsletter is 100% free. I posted the money gun, Jay Powell, right there yesterday. But yeah, you do have a free newsletter. If you want that newsletter, I posted SPY in there yesterday. And the reason is I think a lot of people do look at SPY. And I posted several, and there's Penny barking at the birds. Hold on one second. Penny, I love you. Here is the SPY. And SPY, you've got several supports, just like QQQ. So if we break this 523, we're at 535. If you break that 523, I would argue there's probably support at 530. If you break that, then you look at the next level. And you want to see strength. Where are you going to see strength? You're going to see it in your MACD. You're going to see it in the RSI. You're going to see it in the volume picking up. You're going to see it in the 9-day or the 21-day making a turnaround. You're going to see these moves in these indexes. And what happens is, as you see those moves pull back, that means it's a buying opportunity. If you don't see these things pull back, then you can assume that they're extended. Doesn't mean you get out. It doesn't mean you get out. We will talk. One of the things that, and I was going to bring this up later, but it's a perfect time. Bill Gates could have been the world's first trillionaire if he had diamond hands. We talk about diamond hands with GameStop, diamond hands. So Bill Gates, and this isn't the wrong strategy, by the way, but had he just held on to his Microsoft stock instead of trying to do the smart thing and diversifying, he would have $1.47 trillion today. No, It's not a horrible thing. I mean, the dude's got billions. So he doesn't care necessarily about money, but it just goes to show you want to hang on to your winners. So when you look at these indexes, you want to look at your portfolio and you want to take care of these things and make sure they're good. Now, we talked about RSI divergences. Find success in trading with the RSI divergences. Why not turn it into a strategy? I have posted this. I will post it in the newsletter. If you are a subscriber to TrendSpider, you simply click on this link and import it into your system. And it's an hourly candle for for SPY. If you want to trade SPY and you want to trade options on SPY, this one, over 36 months, it has a 73% win rate. 73%. So again, 73%. Fantastic win rate. You can see the chart right there. If you want to sign up for TrendSpider, how do you do it? You go to the link tree. The link is on the screen down below, linktr.ee/daily stock pick. And you get to this screen. The top one is TrendSpider. And you click on that link, you get to this. And it's $53.50 a month. $53. You get 6 months for free when you sign up for the annual plan. If you want to pay monthly, you can pay monthly. Try a trial. Get it for $107 for the first month. And then you can, switch to the annual if you want. If you want a charting program, again, it's the best charting program in the world that I have found. I've been using this for years now. And I actually love it. You'll see it if you stick with me. You'll see the 4-hour algorithm. You'll see the 65-minute. You'll see everything that I use. I provide you when you sign up through my link, and then you email me. So once you sign up, you just go over here to this little email address, take a screenshot of your sign up, of your billing statement, and boom, send it to me. I will email you back, and you will be able to do exactly what you see here, which is just import all of my strategies, all of my watch lists, all of my custom scanners that I've built for you. It gives you a way to start. I also provide you with, by the way, a couple of new tools that I haven't provided on the podcast before, where you get to learn about technical trading. So if you're scared about it, don't be scared. It's $53 a month. Try it one time. Honest to God, if you don't like it over the first couple of months, I would say stick with it. It is a great tool to learn. Now, I saw this yesterday. Ben Kolesniski, I don't know how to say his last name, and my apologies. He said, I just backtested all of the most popular trading indicators over the past 25 years. Now, I asked Jason from TrendSpider, and this is what is great about the TrendSpider team. I said, I'm going to see if I can try and build this, because they do have a ChatGPT integration where you can put in and just type out a, hey, I want to do this indicator on this time frame and blah, blah, blah. And you can build that strategy yourself. So I said, hey, I'm going to try and build this. But you know what, Jason? I want you to maybe build it in an office hour session. Jason replies back, easy peasy. He's going to build it for us. So you'll be able to import this strategy that this world-class trader who does options did in TradingView, and he didn't provide you that thing. He didn't want to provide it because he said, if I provide you my strategy, then everybody starts using the strategy, and then it becomes not good enough for me, because if everybody's buying at one time, drives the price up. Is everybody selling at one time, drives the price down. So it's not great for markets, but Jason's going to build it for us. And if you want that, get TrendSpider. There are 4 stocks today to watch. First one is Apple. It fell marginally, extending its loss in the previous session. The company's annual developers conference held on Monday drawed mixed reaction. We'll go over this. Shares of Oracle today. They are reporting earnings after the bell. General Motors, don't sleep on this one. I'm not a big fan. I will not, for personal reasons, I will not buy General Motors. But the stock, it will make you money. I mean, it's really done really well. And they got an upgrade. So the board approved a stock buyback, $6 billion, and they raised the dividend. So Class A shares of Confluent climbed 2%. We don't care about that because I have no clue what they do. Here's the Apple stuff. Now, changes the game. Apple AI offers impress Wall Street. It depends on who you're looking at as far as Apple. Did I like it? Yes. The stock market just opened, and Apple's up 1.3%. So it's going to gain back probably what it lost yesterday. Yesterday at its top, it hit, this was Friday. no, this was yesterday, June 10th. This was the morning candle. It hit a high of 197. So you're probably going back to 197. You're at 195 now. The low yesterday was 192. So it's putting in that sideways move we talked about. Now, is it coming down? Typically, what you're going to see is you're going to see the entry here on the algorithm at 169. That's a great one. That's a fantastic. If you bought at 169, if you bought anywhere in the 160s or 160s or 150s, kudos to you. This is a nice 16% move in 46 days. That is unbelievable. Your average win for Apple in my algorithm is 10%. So you're above your average win. I would be careful of this above average win because stocks don't always just go up. They tend to pull back, and you're pulling back against a major resistance of previous highs, a double top at about 198. So that's going to be your resistance. Until that resistance is held above, it is resistance. Once we go above that and we hold above that, it turns into support. So whether you liked it or not yesterday, it did disappoint from a stock standpoint, but it was more a buy the news, sell the event. And those are have been around a lot. Bitcoin ETF is an example. Hold on one more second. Penny, I love you. Ugh, the birds are out there. So what do you want with this? Well, I would say don't buy it. Your upside from 196 to 198, that's not huge. If you want to add this for a long-term buy, go ahead and have at it. But I can't guarantee you that we won't see lower prices. Am I trimming at this level? I've sold a little bit. And we're talking like one or two shares. I have thousands of shares, just so we're clear, thousands of shares. I am doing that one or two just to get psychologically ready for if we dip back down to the 190 level, below 190, I may start to trim on that if we see weakness in this in these candles. Just simple. It's just simple stuff. But I will tell you, Gene Munster, he's big on Apple. He says this drives a new iPhone upgrade cycle. That will drive the price higher. This is the other thing. Keep an eye on Apple heading into next month. The stock has a perfect record over the last 8 years in July with a massive return of 8.23%. So again, July is 100%. If we go back and we look at, again, this is TrendSpider. This is part of their greatness. This is 14 years. What's July? July is 93%. So not just 7 years at 100%. It's 93% over 14 years. That means 9 and 10 times you have wound up positive with a mean change of 7.34%. So you don't want to get out of Apple a tremendous amount. You just don't. It's not something that you want to look at and say, oh my God, I've got to get out of this. If you want to read those articles, I will post them in the newsletter. But again, that's something that it is. Now, let's talk about the one downside. Elon Musk posts, if Apple integrates OpenAI at the OS level, if you haven't heard, Apple is partnering with OpenAI, then Apple devices will be banned. Elon Musk does not understand. And he got readers' user notes. It says, even he got user notes. He just got demonetized with the community note. His biggest thing is he doesn't trust OpenAI. He has a beef with OpenAI. 100% he has a beef with OpenAI. He doesn't trust them. I'm not saying you absolutely trust Sam Altman because there has been news out there you can't trust Sam Altman. But what I am saying is the way Apple explained and integrated it, so you will be able to use your Apple ID to actually go over to OpenAI, and they will give you the option. They also made it clear afterwards that they will be integrating other models, meaning Google Gemini, meaning Perplexity, meaning the other ones. They may even present their own OpenAI, their own large language model. But that's what's great about Apple is they're not locking themselves in. They just start partnerships. So they're not spending the millions and billions of dollars that Google, that Meta, that Amazon, they're not spending that amount of money. They're doing it a smart way. They're saying, hey, we don't know that these large language models are the golden ticket to AI, but we want to make sure that people have access to the best tools available on the iPhone. And that's what they're doing. And again, the market's liking it. It's up 2% today. So, yeah. Again, I just think it's a really, really good thing. And Elon will probably, I can't imagine the backlash that's going to happen. I mean, let's be honest. Elon has an iPhone. It's not like he's running around with Android. Where's he going? He's not going there. Uber. This was one I wanted to go over. Oh, there's a couple of other ones that I want to go over real quick. We'll get into this one. But I wanted to point out pins. Because pins is one, I took a beating because on my Savvy Trader portfolio, the trading portfolio, I bought pins before their earnings. And it was right here. And I bought it at about $40. And I endured this all the way down. And I didn't add to it in the Savvy Trader portfolio, but I was adding a little bit, and we're talking 1 or 2 shares. It's not much. I mean, we're talking 80, 90, $120. But I started adding to it. And then they have their earnings. I always say this, that any reaction is an overreaction in a good company. And this is a good company. Elliott Management took them over. So don't be shocked. You know, again, I'm up 10% right now. It's at 44. I'm up 10% when I bought at 40. That is probably enough for me to get out. But these lower ones, I will get out as it shows weakness. You can see this one, the algorithm got you out with a 24% gain. 24% gain. And it got you right back in. So, again, buying and holding on this one makes you a lot more money, 127% over 24 months. The algorithm just gets you in and out too much. It's 27 positions. Typically, when an algorithm gets you in and out that much over time, buy and hold typically does a little bit better. So, the other one that I wanted to point out to you guys that I do own, and I've added small time to. I sold at 17, before these earnings. And as it went back, it's now come back almost completely, almost covered this entire gap is Snap. And this is one, again, any reaction in the market is an overreaction for a good company. This one was way down here at $11. It rode all the way up here to $17. The algorithm got you out a little late. But you don't want to play in that absolute part. It's not going to work for you. If you're playing this middle ground, it's going to work for you. So that one's a good one. Eli Lilly, and I'm going over some of this stuff that I know. Eli Lilly just got approved for an Alzheimer drug. I'll put the article in the newsletter. This one just continues to go. It's down 0.38. I would say any weakness that you see in this, you buy. This particular stock in the algorithm, it's up 20% since we triggered a buy. Just as simple. You make 188% if you buy and hold. 23 positions over 24 months, you make 116%. We were just talking about PayPal on the live, how I don't like PayPal because it's a upper left to bottom right. This is a bottom left to upper right. Bottom left to upper right stock on the weekly. Eli Lilly. Do not fall asleep on this one. Toyota. Toyota was one that was, we went over GM, how you shouldn't fall asleep on GM. Toyota has some scandal that they use something. This one has been killed, and we're talking killed. It is not one that I would say is an overreaction until there is something material about that story. Toyota has been a just a flyer. Ever since March 2023, this one has been soaring upwards. It's in the middle of the pullback. Where's the support? Probably here at about 205, 210, somewhere in that neighborhood. But your lower support within the price range is probably 180. You don't want to buy into don't want to time the bottom. You want this one to actually turn around. So be careful with this one. But yeah, I figured I'd bring that one up. Now, as long as we're talking about cars, Uber loses California appeal to keep employees as independent contractors. This hurts because Uber has to become, Uber's big moneymaker is going to be when they get automation. When you can automate your drivers, that's where their cost comes out. And if they can automate the driving of some stuff, then they do have an agreement with, I think, Google, with Waymo, and they own portions of that. They had a test going on. You can clearly see that 61 has provided support. You're seeing a little bit of turnover now that you've filled this gap from the previous earnings. Now that you've filled the gap down, it's seeing a little bit of weakness. I'd probably say, the resistance here is 71. Under this 200-day, the 200-day moving average, which is still moving positive. Your 50-day still moving negative. Not great. But I would say that this 200-day, if you wanted to buy it here, 71 is the next resistance level that you're going to see. Unless you turn it back down. But I would buy it under this 200-day because it doesn't go under there very often. And especially, I think they're going to kill it on their next earnings. Their last earnings were good. They were good. But the stock ran up too much. I think with the next earnings, you're probably looking at an $80 stock. But this will hurt Uber and Lyft. Snowflake, an interesting one. Shay, 5 years ago, people said NVIDIA would never become a mega cap because it was just a gaming chip company. I think there's a similar narrative disconnect happening right now with Snow, as people label it merely a data warehouse company. They're not considering how transformative it could become in an enterprise AI system over 5 years. I added another 10% in Snow. If we go over here to FinViz and we look at Snow, actually, we'll just look on the homepage because you can see Michael Spicer. He bought $10 million of Snowflake yesterday. That's not a small amount at 131. If we go and we look at Snow, I have said this before. Snow will pop to $200. It absolutely will. At some point in time, it will pop to $200. Do you want to buy it now? I would say Shay is a little too early. He's trying to time the bottom. I wouldn't buy this right now. I would wait until you have strength on this 4-hour. The 4-hour algorithm on this one provides you a pretty good entry. Now, where are we in this range? We're at the very bottom. You're trading at what, 128 right now? I bought at 180. I bought at 150. We're trading at the bottom. It doesn't show strength right now. You want to wait until you have strength. Do not listen to somebody on the internet when they say they bought. They bought more. You want to make your own decision. And I would argue that this one is one that just got killed. Now, Workday and the trading desk, all software yesterday got killed. All software got killed. So understand that software is just not a main player in this market right now, because higher for longer hurts these names, because they do, again, they have huge margins. And as businesses can't have to pay interest, those margins have to come down. They have to lower the price of their software. So all of those three got pulled back, but I thought it was interesting for that buy. Meta clicked over 500 yesterday. It's pulling back again today, a little bit today. It's at 501. It's over 500. Remember how I told you with their earnings where they said, hey, we're going to spend? That's an overreaction. I said it before. You're going to see this gap filled. We filled the gap. What happened? We filled the gap. If you bought it down here at 445, kudos. You're up 10%, 11%. Fantastic. Did you get out with the 4%? I got out of FBL because that's a double levered ETF. I got out of that. But here, this is what I see. This is the gap that's filling. Again, their Bollinger Bands cinched up right here. You traded sideways. We talked about it earlier. Traded sideways. Where did it go? It went to the upside because you had confirmation. If anything that I say doesn't make sense, go over here to dailystockpick.substack.com. Go to the Education Center, because the Education Center will teach you all of the confirmation, all the moving averages. It teaches you my entire system. So sign up for that. But Meta over 500. NVIDIA. Let's talk about NVIDIA, because this one hasn't stopped. It did its 10-for-1 stock split yesterday, and it traded kind of sideways. It could enter consolidation phase here. This could be a drag on the market because they've become so big. Understand, this one could be a drag on the market. I've said it before that I do think that we are looking at a sideways summer. You can see this godlike candle right here on the 10-for-1 split. The open at 120. This is a weekly candle from this week. The open at 120, the high 195. That's just an anomaly. I saw some dude on YouTube last night talking about how GameStop traded all the way up to 400 yesterday because the market tests the price after hours. Dude, it's an anomaly. It's not a fucking test. God, I wanted to smack the TV. and say, who's listening to this? He's on his phone. And he does screenshots. And by the way, he's got like 20, 30,000 subscribers on YouTube. I only have like 2,000. I don't know how I'm not more popular with that guy spewing that kind of stuff. NVIDIA, though, we want to talk about NVIDIA because I do think, we went over yesterday how you want AMD and NVIDIA. I personally own both. NVIDIA is the one that's in the core portfolio. And if you want access to the core portfolio, it's free. Go over to the link tree and you go down here and you click on Savvy Trader, follow my trades, and you'll get to the core portfolio. You'll basically see all of my portfolios out there. If you want the core portfolio, you just go and click on the portfolio. It is absolutely 100% free. What is this? It's 35 names. Oh, and let's compare that. 35 names, and I just buy 100 shares. That's it. I've got to get rid of 900 shares of NVIDIA because that's going to be, that's 1,000 shares. So I'm going to get rid of 900 shares of NVIDIA this week. But that just means that I have 100 shares in there. It's going to provide me some cash. It's going to be a hurting one because that 10-for-1 stock split, definitely hurts. When Apple split 10-for-1, I had this core portfolio. Look, this is going to continue to be just 100 shares of each stock. And you can look at it. If we look at the current value, here, NVIDIA is by far the largest at 122. Eli Lilly at 85. Look at the percentage gains, though. I mean, SMCI is up 147%. The total return is fantastic. This is what you want to point out. This is what I want to point out. The gain of over 1 year, June 9th, 2024. The daily stock pick core portfolio, which is just 100 shares of each stock, gained 39.75%. You'd be jumping for joy right now for 1 year if you were up. Because if you just bought the Qs, that's 26.18. You know what else? My daily stock pick core portfolio, you ain't paying a 1% fee, a 0.1% fee, 0.01, whatever the Qs is. You're not paying a fee. This is free. It's free. So I would say if you're looking at NVIDIA, buy NVIDIA. If you're looking at just getting into AI chips, you want AMD. Well, how do you buy AMD? Well, you use my 4-hour algorithm to find an entry. Yesterday's entry, it got out. It was so far down yesterday. You got you out with one candle with a 4% loss. Big deal. Your average win is 13%, so you lose 4%. Over time, you make 28%. AMD, I just buy and hold. I look for the algorithm to put me into this stock. Why? It's a bottom left to upper right story. Bottom left to upper right story. That means you're making money. So I want you to do that. Oxy is another core portfolio stock. I said this before. You can buy it under 60. It was under 60 here for a while. It's back over 60. You can sell it now. Got you in at $60.31 today. This one is a solid stock. Warren Buffett buys this one like it's Pepsi. He likes Coke, though. But he buys this one like it's Pepsi. UNH, I've said it before. You buy it when it's under 500. You sell it when it's over 500. This entry that it got you in, I said don't buy here. You can buy here now at 496 when the MACD crosses up and the algorithm gets you in. And then you can sell it over 500. That's if you want to. Hold on one second. Oh, I thought I heard the dogs. No, I thought I heard her crying. But she's not. Microsoft, we talked about letting the winners run. One that I want to bring up, Shopify. Because Shopify, we talked about gaps here. And there is a gap on Shopify, but I want to point out, Shopify attracts a new bull as JP Morgan points to industry-leading growth. And Shopify, in my mind, is a buy. It is down from where it began the day. But again, we're looking at a buy here at 58. And where did that 58 occur? It occurred on May 21st. You since then have had confirmation over that 9-day. Your 50-day, I want to provide you some caution. That 50-day is still moving negative. The 200-day is still moving negative. This $80.30 is going to be your resistance. But the gap here that these earnings provided between 75 and 64, you've got to get started on this gap fill at some point in time. This may be it. Now, I don't want to say buy it right here because again, the average win, 9.23%. So we don't have much more to go to get up to 9.23%. We're right now at 8.4%. So you want to be careful about this one. I do think that you will see a little bit of a pullback. If you want to add Shopify for the long term, I don't think it's a bad one because we don't know when this is going to fill up to 75. But your cap is going to be 80. Why is it going to be 80? Why did I put that there? Well, that's where your 200-day is. And that's where it provided a pop here the last time it broke the 200-day. Previous to this, it did break it here in February. But the previous resistance is 80. That is where the 200-day, it's just too clear that that is going to be resistance. So whenever you buy it, whether you buy it at 63, whether you buy it at 59, that will provide you some resistance until we get over that and hold it. Old resistance turns into new support. So you will start to see that. But again, JP Morgan, if you want to read this article, it is a really good article. Now, Zscaler, NVIDIA partnered to deliver AI-powered security solutions. Zscaler is up 1.14. NVIDIA, we just talked about. If you want cybersecurity, we talked about yesterday how CrowdStrike got added to the S&P. I personally own Palo Alto Networks in the core portfolio. It is Palo Alto Networks. It is not Zscaler. It is not Fortinet. It is not CrowdStrike. It is Palo Alto Networks. I've owned that Palo Alto Networks, but I do own CrowdStrike. I do not own Zscaler. My dad owns Fortinet. I like Fortinet. Fortinet and Zscaler just haven't worked as well as the other two. So I do like this name. I like this buy down here at 168. 186, I would say your 50-day starting to move positive. Your 200-day still moving negative. You do have this crazy gap up here. We talked about how gaps, earnings gaps, reactions in the market are overreactions. This one's a little different in that I do think there are some systemic problems with this. But this one, Zscaler and NVIDIA partnership, that provides a pretty decent, kind of a home run name on that one. So I do like that one, and I like it a lot. We talked about insider buys. So if you go to FinViz and you go to home, okay, finviz.com, you can always go down here. CRM. Now, this is one with a gap down as well from earnings. CRM saw a huge buy from a director on June 3rd. And that's $100 million. $100 million at 233. Now, this one, the valuation is a little bit nuts, but you have a founder who is the CEO, Mark Benioff, and he has made magic happen before. This pullback, you've started to see this one start to make this move. Now, he bought at 233, which is way down here. The algorithm gets you in at 245, 242. You are trading at 238. You're seeing some weakness. I would tell you that I do think that this one might be an opportunity to buy. If we go over here and we go to Seeking Alpha, because I want to teach you how I use the tools to look at this stuff. So CRM, very expensive stock, extremely expensive stock. Your 52-week range, 193 to 318. You are right in the middle on the lower half of that. If you go over here and you look at Wall Street, they have a ton of analysts, 52 analysts cover it. It is considered a buy. The average price target is 300. That's 26% up. Now, when you go to the revisions, not great. 41 up, 6 down. But revenues, 3 up, 40 down. Revenues is where it's getting killed. If you go over here, you go to the growth. They're basically growing at 11% revenue growth, but they're expected to only grow 9% over the forward. Hold on one second. Penny, I love you. Okay. If we go over here to the valuation of this, then you can see this. The PE is extremely high, 17% over the sector. But I point this out. The PEG, which factors in growth, and they're expected to grow, is below the sector. So that PE could come down just based on the growth. It could. Is it likely? I don't know. I own this one at about 220, but I've held this one way too long. I should have been selling in the 300s. Absolutely should have been selling in the 300s. This one has had quite a valley, and you can see it double topped out there at 300. Double tops aren't good. They provide significant resistance. So if you're buying at 238, I think your next top is 300. Will you get back there? Absolutely, you'll get back there. But again, they do this type of thing. Now let's take a look at Oracle, because Oracle reports earnings tonight. Oracle is scheduled to announce earnings. The consensus is $1.65. My favorite website is Earnings Hub, earningshub.com. I like this one. You can see earnings estimate, $1.53. They reported $1.41. They're expected to increase. Whichever one you want to read, whether it's Seeking Alpha or Oracle, if you're going to buy this before earnings, understand what they're expected to report. They're expected to report growth. And so when you take a look at the stock chart, you're going to see it's run into this earnings. And so I'm a little bit scared that this one is going to top out and maybe see a pullback. We saw a little bit of a pullback yesterday. Algorithm got you in at 122. You're trading at 123. Now, when we look at this one, you know, your MACD right on the oscillator, RSI at 53, kind of in no man's land. Algorithm makes you 71%. Buying and holding makes you 83%. I would say this is a significant name that you want to have in your portfolio. I don't personally own it. I've loved it since here. So I like this one, but here you go. I mean, it's just, this is bottom left to upper right, but I do think you're seeing some sideways stuff here. And that's one. Another one that's tomorrow is AVGO. This is Broadcom. I own a significant portion of this. I think this is one that you own along with NVIDIA, but we're seeing some sideways trading on this. They're expected to report. It's a, we can go over here to Earnings Hub and we can press on AVGO. And you'll see they're not expected to report as much as they reported last time. They reported $10.99. They're expected to report $10.05. That's the estimate. They reported 11.96. They're expected to produce revenue of 11.2. That's less, so they have lowered the bar, even though they're trading sideways. Algorithm got you in here at 1421. I'm sitting at around 1350. Was I unhappy when this one dipped down to 1100 or 12, right at 1200? It got to 1197 at its low. No, I wasn't happy. I added a little bit more at 1300. I added a little bit more in 1350. I haven't added more at 1400. But this one reports tomorrow. It's an interesting one. Let's see. Shane. I think this one is from, I forget which platform it's from, but Shane, NAVI. I can already tell you, Shane. And I looked this one up. NAB. NVIDIA Biopharmaceuticals. He has his NVIDIA a good stock for positive returns long-term or just short-term? Okay. We're going to first look at this one. NAVB is the symbol. Okay? You can't find it in Seeking Alpha. Let's go over to, in Finviz. Let's go over here. I'd like to know how you found this one because I don't even understand how you find it. But here it is. Here's the killer. The market cap is $999. NAVB. Is it good for positive? It is trading at less than 1 cent. 1 year, it's down 99%. It's a penny stock. This has no money. You can basically buy the entire company for $1,000. So is it good for short term? No. Is it good for long term? Hell no. I mean, unless you want to buy this and turn that, you can be the CEO of this company. It's absolutely worthless. Absolutely. And, I think it's delisted. I don't even know how you'd fill this one, Shane. It makes no sense. There's nothing that can be gained from this. Nothing. I mean, nobody's covered it since 2020. And when you go and you look at a 5-year chart on this, well, I don't know where you got this one from. It makes no sense whatsoever. There's no chart on it. There's nothing. I don't even think it exists. So I don't know where you got it from, Shane. Let me know. Meek Low wants, what's your thoughts on the next GameStop pump? So here's my thought on GameStop. I think you want to trade this on a 5-minute. Roaring Kitty posted the Joker holding a money bag. It's a meme, and he's got his head in there. There are rumors going around that the number 5 is in the kitten's head, and that could mean a bunch of different things. It could mean that maybe he's the 5th board of director added. Maybe there's something else, but here's what you have to know. And this is the killer on this one is no matter what they're pumping up, whether it's a short squeeze, whether it's the Roaring Kitty saying, hey, I've added to my position, whatever it is, if it's the short squeeze, when you get to $30 or $40, then Ryan Cohen as CEO is going to issue more shares. that is going to take you all the way back down. There is no way that I would trust that this one runs at all. Short time frame, Meek. Short time frame. You want to trade this on a very short time frame. Maybe it's the 65 minute. Again, the 5 minute has times when you get in. The 65 minute, here, the 65 minute over 8 months. You have 86 positions in this. Your average win, 9.41%. You made 204%. If you just bought 8 months ago, you're up a great 50%, but you've made more trading it. And that's the issue, is you're going to make more trading this. The 65 minute doesn't have you in. You don't have confirmation. There is no reason to play this one. There are other stocks that are better at playing. And if you want to find other stocks, you can go to just look for big movers. You want to look for momentum. We talk about Ross Cameron and warrior trading. There are two different types of style. I am more of a long-term buy and hold seller investor. And Apple's flying, by the way. Apple's about to cross 200. It's got this God candle, but God, the market loves this freaking stuff. But you're up 3.42%. But Meek, I would look for momentum stocks is what they're called. And Ross Cameron of Warrior Trading is 100% a momentum trader. He is just trading on the chart. Trade GameStop like that. I don't think that there's going to be a pump. I don't think you time the bottom. I think you look at the chart and you ride whatever you can. That's it. Bagged Lopez, MUSA. Let's see, MUSA. I don't even know this one. Murphy USA. I mean, algorithm makes you 41%. Buying and holding over 24 months makes you 86%. It's got bottom left to upper right short term. Let's look at the long term of this one. I mean, solid performer. MUSA, let's go over to Seeking Alpha and we'll take a look at some of the stuff. Let's see what they do. It's a hold in the quant. Is this Murphy Beds? Market retailer of motor fuel products and convenience merchandise. The company operates retail stores under Murphy USA, Murphy Express, and Quick Check brands, as well as operators fuel convenience stores, non-fuel convenience stores. So it's consumer discretionary, so it's XLY. So I do have exposure personally to this one. If you wanted to get XLY, you could on this one. I don't think it's bad. I mean, what I'd worry about is this C-, because it's run so much. They're taking their earnings per share up, 1, but 5 are taking it down. 3 are taking the revenues up. 2 are taking it down. If you look at the growth, they're not growing. Their year-over-year revenue down 10%. I don't know why it's actually going up other than, this is a B+. Forward long-term growth, they're projecting pretty much growth, but it's forward. Momentum is an A. Profitability is a B. Let's see what their margins are. 6%. Return on equity, though, A+, 68%. So they're using their equity pretty well. The valuation, the PE, 18, it's a little high. But their PEG, forward, they're significantly lower. So MUSA, I don't know what has gotten into this one, but it's been a solid performer. Solid performer. And if you're worried about, say you want to get into this one, you're like, God, it's up 86% over the last 2 years. Should I get into it? Protect yourself. The algorithm. So the algorithm, it wins 32% of the time. Average win, 8.72%. Right now, I would probably not get into this one. Because if your average win is 8.2% and you're up 10% on currently, it means you might get a little bit of a turnaround. You might have an opportunity to buy it. I would say that your support for MUSA is probably at this level right here, because old resistance turns into new support. Look at how many times this hit the 427, that 426, 427 level. That's probably your support level. So if you were looking for an entry into this, I would say look for some weakness, and that would be where I would look to start adding. Would I trade this one? I don't know. I mean, it's not in my wheelhouse. I'd rather own it through XLY. In Reddit, Riz23. I posted the other day about this one that I thought this was an under the radar kind of crazy one. Oscar. This is my personal healthcare provider through the exchange, through the healthcare.gov exchange. Oscar, the performance in the algorithm is unmatched. 24 months. Okay, 24 months. 21 positions. Not even once a month. What's your gain? 986%. Okay, what do you get if you just buy it and held it for 24 months? You'd think, God, with that kind of program, if you bought and held, you've only made 345%. Again, Oscar, the algorithm got you in at $20.18. Today, you're up 2% and you're at $20.94. I would say your top and your resistance, where you want to start looking at this. Your average win is 45%. You don't wait for 45%. Because you're at all-time highs, I would probably put your resistance level at about 2350. That's the all-time highs right there. If we go and we look at Oscar and we look in Seeking Alpha and we look, it's a strong buy in the quant. It's not overvalued. The growth is crazy good. The momentum A+. The revisions are all up. This is a bottom left, upper right. You're looking at 2344 as your 52-week high. So that would be where I would look to put it. Now, when you look, 5 analysts cover it. So take this with a grain of salt. Their average price target, $23.80. It is not outrageous to think that you could get up there. So that's a great one, Riz. Glad I could provide it there. It is just a fantastic, fantastic stock. I think with this pullback, you have an opportunity to get into this because their earnings were really, really good. T-Rebs, double top confirmed for CELH. Buy in around 36. Is there still room to grow? And he wants me to look at bros too. I said this before. I said this is weak. And here on the 4-hour algorithm, yes, you do have a double top at 99. Yes, it will get back to 99. But you want to buy when there's strength. I'd rather see you buy. You could have said, hey, I think I've reached the bottom here. This resistance right here, where it popped it right here at 69, that was great. We're at 63 right now. You want to wait for this one. You want to wait until you have some type of indication that a turnaround is taking place. Now, the average price target is $90 for this. There's only 16 analysts that do it. The valuation is why it's getting killed. They're not making money. They are not making money. So understand that this is just one of these stocks that is going to need to pull back, and it might pull back quite a bit. We had this trading range between 48 and 62 back here at the end of last year, and that trading range may come back into play. You may be using that as that top one as 62 as support. You don't know. I'd rather see you buy this at 66 or 68 on the way up than to see you buy it at 63 and then it pull back to 55. So, and BROS, they just diluted shareholders. I mean, this is Dutch Brothers. This is coffee. I'm not a big coffee drinker. If you like Dutch Brothers, go at it. Go get it. They've got growth. They are up 0.6% today at $40. You're dealing with, again, a bottom, a kind of, long term. It's kind of in that turnaround stage. So I think you're going to see right here at 40, I think you see some resistance. When you get back above 40 and you hold 40, you're going to kind of look at probably about 45 as resistance. I mean, Dutch Brothers, I'm not going to look at the valuation of that one. Now let's talk about scans. If you go to the newsletter, and let's just go yesterday. If you go to the newsletter and you go down to the bottom, and there's this scans list. And the scans list is just stocks in the 4-hour algorithm that provide you a bullish tendency. And we can look at it. Tesla yesterday. We can look at Tesla. How did Tesla perform? Well, we know that Tesla has their shareholder meeting later this week. I've said it before. I don't trust this. I don't trust it. It's at one, it's down here. It's got weakness. We saw yesterday and it had weakness. I said I wouldn't buy here at 177. We don't have confirmation. I'd rather see you buy at 180 than to buy at 177 and try and time confirmation. Well, you're at 169. I do think that 139 provides you some support there. I think if Elon Musk is kicked out of this company, it is no longer. But that's how you use the scans, something like that. Now let's talk about today. Occidental Petroleum we went over has a cross up. Now, what else has a cross up? Well, SMCI. Now we can look at this one. I've said this one is trading sideways. We had a buy here at 786. You're trading at 772. Would I buy here at 786? I'd wait for the candle to give me confirmation. It hasn't. It hasn't. I've said it before. I think this one trades sideways. Is this one crazy to get into? No. No, the valuation is still not horrible. I'm looking to add to Dell. I've got enough SMCI. I've said I'm waiting until July or August because that's when it turns into long-term capital gains and I can start to trim it because it's in my brokerage account. I don't want to give up, I'd pay income tax, which would be around 20-25% for my income bracket, maybe as high as 30% if I make a lot of money. But it could be that time. Long-term capital gains, 15%. 15%. So I'm waiting for, I don't want to give up an additional 5% of my gain. I'll just wait for it, wait for 1 year. I don't think it's overvalued. The profitability is a D, and the reason is because they only have a profit margin of 15%. And you go and look at Dell, that's where Dell got taken down. Is their profit margin of 23%. The sector is at 49%. And so again, I'm looking to add Dell. I'm not looking to add to SMCI because I already have a ton of SMCI. You can look at the other competitor. This is HPE. This one just had a pop on its earnings, and it popped up. Well, their gross profit margin is 34%. So it depends on which one you want to look at, which one you think is going to buy. Dell, I think, is the best positioned in that one, but it got a buy. Now, Target, I still think is a $170 stock. I am still holding on to this one. It has dipped down to 140. Walmart got an upgrade yesterday. I own Walmart as well. 148 was the price in Target. The algorithm loses you 13%. You lose 1.5% over 24 months if you bought this one. This has been a death spiral. I mean, again, this is one that I probably should have gotten rid of several times. We talked about it with Shopify. Look at how this one used the 200-day as resistance right there when it popped to 175 back in April. It popped up to 175. Ever since then, it's just been a downward spiral. You don't have any strength whatsoever. It could be down. Do I want to buy it? No. Does it show positive in the algorithm? Absolutely. One that I think is an interesting one is Dexcom. The Apple Watch is said to rumored to be working on some blood sugar stuff without being invasive. Dexcom is the number one insulin measurement tool within diabetic people. 116. I've said it before. There is a range here in the weekly that when it hits 130, 117, you can buy it because it will pop up here to about 140. You can buy it. Just, your absolute resistance level is going to be this 200-day at 107. This is a good company. It's a great company. My dad owns a bunch of this. We haven't traded it. Probably going to buy a little bit more. But yeah, there's a bunch of stocks, especially in the energy sector. We can talk about PARR. I think this one may be an alpha pick. If you want to talk about alpha picks are amazing. Alpha picks, they just had their portfolio review yesterday. We went over it. They posted the video today, so you can watch that video if you didn't get a chance to go to it. Look at Alpha Picks performance. This is about 20 stocks. It's not a ton. It's about 20 stocks. Look at the performance of these stocks. 122%. The S&P only up 35% during that time. You get two stocks, an in-depth analysis every month for two stocks. And you can go back and read the previous analysis of everything that you're doing. PARR, this is one that looks to be turning around. It could turn around. Do I want to buy it? Not on this weakness. This is something that you want to take a look at on this weekly. And where's going to be the stop? Probably 21. Probably 21. If we go over to PARR over here and we look at it in the Seeking Alpha, the quant has it as a hold. The valuation, A+. If we go over and look at the valuation, it is crazy, crazy low. The growth, D. 11% year over year. But they're just not making room on the momentum, D. And momentum is probably a stronger force than anything. That's where you're getting killed. C, because 2 revisions up, 3 down. Now, if we go and we look at the ratings and we look at Wall Street ratings, how many folks cover this? It's only 6. It's only 6, but they're showing bullish tendencies. Would I buy it right here? No. So you want to take a look at those scans. You want to take a look at some of these things. Venom or Viper. I always call it Venom because the symbol is VNOM. But Viper, trading sideways. $37. Your top right here, $40. Be a nice 10% move. If you go and look at a weekly, this is a quality energy name. Bottom left, upper right. Could trade sideways. Your 50-day starting to move positive. Your 200-day starting to move positive. Your MACD a little bit high. Your RSI at 58. If energy's moving, the one that I like and that I have in the core portfolio is MPLX. This one's up 0.5%, 41.25. Where did the algorithm get you in? We can see it here, but it's got a great 9% dividend. $40.21. You're at 41.25. Nice move here, and you've gotten you're not within the dividend period, but nice 2.5% move within 10 days. This one's not going to move a ton. Your average win 2.65. If you're trading it, you may want to get out of it. But MPLX, I'm in it for the dividend. 9% dividend a year provides me 10%, no matter where the stock is moving. But if we go and we look at a weekly, that's been a nice stock move. I mean, I bought it, during the pandemic down here at about $11. I haven't gotten rid of it. Have I had the chance? Sure. But I haven't because it provides a nice dividend. So if you have any questions, hit me up. Remember, with Linktree, you got TrendSpider, special set, get 6 months off. Seeking Alpha, I save you 20% off if you want to read these articles and you want to see the analysis. Instead of asking me, you could just read the analysis of experts on stocks. And then Alpha Picks. Alpha Picks, this is the best one. Again, if you can't afford the $4.49, you're just not trading with enough. But this provides you such a great platform to get great stocks. And we just had one. I forget which one it was. We had Bluebird, which was a company. GCT, they post a lot about. SMCI was one of their big winners. ANF, which is Abercrombie and Fitch, big winner. So if you don't want any of these things and you just want to join, make sure you're trading with a chart. And Webull gives you that chart. Plus, you get 75 free fractional shares. You get join Webull today and you get free fractional shares. Just sign up. You're on the Linktree. So if you have any other questions, hit me up. Okay. Say bye. Woodpeckers are the worst, Chris. Yeah, Chase. It's an old computer. I know it hurts your soul. I know it hurts a lot. Let's do an indices check because my Apple. I want to see how far I'm up. Who's calling me? Missed call. Area code 225. They did not leave a message. Let's see. Apple's up quite a bit, I think. Apple is up 3.31% at 199. Holy shit. I'm up 6 figures. Whoop, whoop. The market is down 0.13. I'm up over 1.5%. Let's see. 100% agree on. Yeah, snow's a tough one. The trend reversal is when you want to do. Run the Boyle strategy on Mara. So Joe gave me a Boyle strategy. And if this doesn't get you, well, not MPLX, but we're going to do this on Mara. So it's a 1 hour candle. And Joe, kudos for you on this one. And I think, let's see, if this doesn't get you into TrendSpider, I don't know what will. Because Joe can share it with you if you just text him. Holy crap. So 4 years. He backtests 4 years, 7,000 candles. It's a 1 hour candlestick. Your average win, 11%. Your total performance, 2,290%. So let's say you're trading $1,000. What's 1,000 times 2,290%?
That would be 22,900.
That's over 4 years if you just traded this strategy. Now, it's meant to, he developed it on Boyle. And again, that's 4 years. If you go back on Boyle and you look at this one, this is a leveraged ETF on natural gas. This one makes you 100% over 4 years, whereas you lose 96%. So You know what? Let's do this 1 hour on IONQ. Brandon's favorite. Let's see how this one performs, because this is volatile as fuck too. It doesn't perform well. Have you talked about Ropey Rope, Tesla? There's nothing to talk about Tesla, Ropey Rope. I wouldn't touch it until this shareholder meeting's over. I just wouldn't. There's no, I mean, that's going to be a catalyst for it. Wow. Even your 1 hour on Tesla, by the way, Joe, Tesla over 4 years makes 168%. The Tesla strategy makes you 422% with an average win of 10%, 96 positions. So, but it has you out. There is no strategy that puts you in on this. And so Ropey Rope, I would stay away from it. I just, honest to God, you can trade it on a short time frame because it is volatile. But if you asked me, what are you trading, Tesla or TSLQ, which is the bear ETF? I'd trade TSLQ. It's up 2% today. And look, you have an algorithm buy at 36.33, which, your average win is 11%. This one makes you 59% on my 4 hour algorithm versus losing 27%. So it's a decaying asset and you're still making a ton of money. That's a nice 6% move in what, 18 days? So I'd stay out of it. 2 Tesla shares. You're not going to lose your house, Ropey Rope. Here, my parents have about, I think, 50K into Tesla, and I begged them to sell it at 200. They didn't want to sell it. Now they've told me, hey, whatever you want to do. My strategy is I'm just holding. I'm not selling, but I don't have a huge conviction that we aren't going down to 130 or 140. I'm just holding it. So SMCI, Moneza, it's not going up. It's trading sideways. So we can look at the weekly. And I've said it before. This is a long-term buy for me. It's not something where I'm getting out of. It's not something that's going up, but it's not something that really has shown a huge downside either. Yes, it's down from these, 1,022, 1229 is where it hit in March. So you're showing weakness there. Your 50 days still moving positive on the weekly. Your 200 on the weekly. Your Bollinger Bands are cinching up. It's getting ready to move. If I had to, if you forced me today to say, hey, I'm going to shoot this teddy bear, unless you tell me where this is going to go, I'd say it's going down. It doesn't have confirmation, but it's a long-term buy for me. SMCI, the problem with SMCI is that competition has shown up. They were one of the only names on the block that was doing this, the NVIDIA servers. They got added to the S&P, and it ran up. I mean, it just ran up. So do you have an opportunity to get into it? I would say yes. The valuation isn't nuts. The problem is, again, they have to continue to grow. And are they continuing to grow? Yeah, 79%. So I'm holding it. It's still ranked number 1 out of 27 in the hardware space. Dell is number 5 as far as the quant goes. Again, I don't know where it's going, but if you had to force me to tell you where it's going, I would say down. But usually that means it goes up. So Moneza, I'm perfectly happy. If you want dividend stocks, there's a couple of ways to find them. Here in, let's see, let's get rid of this. We're going to go to a screener. I wonder if I have a screener. I'm signed in. Let me see my presets. I have earnings, bounce plays, breakouts, oversold stocks, bouncing, buy and hold, come back. Go over here, and I would look at all. And if you want to see, we'll go exchange. Let's do NYSE. And where is the dividend? Let's see. Dividend is usually the first column. I got to find it here. Dividend yield. Okay. Dividend yield. And you go to very high. Now we can run this. You're seeing, let's say, we still have what? 221. And then I'm going to go, let's say large. There we go. You're looking at, it's oil and gas. I mean, you're looking at a 10%. This is kind of how I do it, Patty, is I would just look at, use FinViz. You'd use Seeking Alpha even. They have a stock screener where you can put in top quant dividend stocks. There you go. I mean, look at the screeners here. You can do daily, I think, crazy good dividend screener for consecutive high yield growth. I have this screener here. I'll share it with you. I'm not necessarily recommending any of these. I'm not a big fan of dividend stocks. I am a fan of MPLX. But if you want a stock screener, they do have some pretty good presets here as far as dividend. If you want quant stocks, you can go up here and you can do edit filters. And this basically says, hey, quant, strong buy. You can exclude that filter. Dividend safely, they're saying B to A. Dividend growth, they're saying B to A. Dividend yield, we can probably put this up more. Dividend consistency, we can probably put this up more. And then you've got, 5 names. Oshkosh, OSK, VICI, and that's probably a REIT, HNI, Grifton, and HY. What is HY? Line of lift trucks. It's a strong buy. Yield 1.84. That's not super high. Probably just doesn't have a. Here, you know what? Let's just go stock screener. And here's what I'm going to buy. Create new screen. We're going to go country. United States. Because I don't want to invest outside. We're going to look at, we're not going to do an industry. We're going to look at advanced filters. Dividends. We're going to do forward dividend. We're going to do valuation, earnings, ratings. I don't care about these. We're going to try and do that. Trading, growth, momentum. And we'll say that profitability. Let's say, okay. Let's see. We're going to say dividend yield. We're going to say we want more than 5% to greater than 8%. Quant rating, we'll say we want it at least a 2.55 as a hold. Profitability, revenue, we're going to say 50 billion. Okay. So I would say these are fairly good companies. You've got, what, 7? So Walgreen Boots, probably wouldn't look at. PFE, which is Pfizer. I've been against this one, but it's turned around pretty well. I do think Pfizer may provide a pretty good opportunity here. It's weak right now, but I would say $30 is your resistance level. You can see right here, $30. I mean, it provided resistance before when it pulled back to 25. So I would look for a pullback to 27 or 25. somewhere in that neighborhood because your MACD is still going down, maybe even fill this gap between 25.80 and 26. But that one's not a bad one. If we go over to energy transfer, that's a good one. If we look at energy transfer here in, what was the top one? It was PFE. If we go over here and we look at PFE, their dividend estimate, 5.87. I mean, that's not a bad dead dividend. If we look at energy transfer, I think this one's like 9%, 8.2%. Not bad at all. If you look at, and you can see the stock, I mean, it's trading between, this one's had a nice pullback to 15. I mean, you're probably topping out at 16, to be honest with you, but you know, with an 8% dividend, that's really what you're buying it for. When you look at this one, it's had a pretty good solid move. I mean, this one, the CEO was buying a ton of this stuff. I mean, you go down here, look at all of his buys. They're at $13. And we're not talking small amounts here either. These dudes were buying, 13 million bucks and stuff. So energy transfer is one that you could do. Ford actually has a really good dividend. Ford has a dividend of what, 5%? 5.55. So you look at, let's say, AT&T. I would not invest AT&T long. That one, the stock just long-term, I don't like it. It's got a 6.24. They're going to reduce it. Verizon is one that you can invest in. They have a 6% dividend. Same thing as AT&T. Just I like it better than AT&T. But yeah, EPD. I don't even know EPD. Let's look at EPD. What do they have? They have a solid 7%. This is enterprise products. I think this is natural gas. If I'm not mistaken, let's see. EPD. Scroll down to the bottom. Operates holding company which engages production and trading natural gas and petrochemicals. Yep. So EPD, nice 7% gain, dividend, and a nice pullback. You're probably looking at about 30 as the top. You know, if you look at a weekly chart of this one, not horrible, maybe a little bit extended, but again, you're looking at the dividend. So I'm not a big dividend investor. The only reason I have MPLX is because I got it at like $7. So, and I enjoy the dividend. But, if I need money, I can always trim that one. Okay, I am out of here. I got to go check the bird's nest out back. You guys have a great day. Actually, I'm up. Unless somebody has other questions, let me pull this and just transfer this over. Let's see. Gonna close that. We're gonna share AirDrop. Boom, MacBook Pro. And we're gonna go over to here. We're gonna go desktop. Go to trash, downloads. We're gonna move to trash. By the way, by the end of the day, if Apple holds 200, old resistance turns to new support. You're welcome, Sherry. I gotta pull that out. And then we're gonna put this in. The editing is where I get bogged down a little bit. There we go. Oh. Good morning. It is Tuesday. Okay. And then I've got to bolster that up. We'll put in our first one. Then we'll put in our second one. Boom. Copy. Paste. paste, paste, and then 611 pod. Okay. Done. We're gonna empty. Move to trash. Okay. I'm out of here.